Hey, good morning, everybody. Good morning, good morning. What's going on? It's time for Morning Monster. And if you want to chat with me, like all the people saying good morning and hey and all the things, just click over here, be a subscriber on the channel. And a few seconds later, you can chat with me and everybody else. So that's the way that works. And if you're not seeing the chat, you're not seeing whatever, that's okay. Maybe you're on Safari, maybe you got some other problem. It's there, I promise. It's part of the live stream while I'm live, and this is live. So if you're watching later on when it's not morning on the East Coast, well, you're probably watching the replay, and you'll have to leave a comment down below. While you're doing that, you can expand the more button, and there's a link. $5, you can come get in Discord. I mean, that's all if you trust me and stuff like that. Now, the big news of the day, the whole title, the thumbnail, all the things right there. Check this out. We have a record $8.9 trillion of government debt. About 1/3 of our government debt for the United States is maturing over the next year in 2024. Now, think about it a second. That's 8.9, right? You're like, whoa, JT. Right below, the title says $10 trillion. Okay? We're running a deficit, a budget deficit of $1.4 trillion. 8.9 plus 1.4, $10 trillion. Uh-oh. So here's the deal. We're going to have to refinance that debt. All of it's got to get absorbed. Maybe we buy our own debt. I mean, that exasperates the problem. I mean, that's 1/3 of the GDP. It's 1/3 of the outstanding debt and 1/3 of the GDP. All maturing in the next year. And that's just the debt. That didn't count the unfunded liabilities. We ramped that up. We're talking like $120 trillion total. I mean, stuff's ridiculous. Getting more ridiculous. And anyway, David, Dex, Carson, Michael, Anthony, Sledge, Ted, Tara, Logan, Don, Maurizio, Infinity, Craig, Philip. Good morning, everybody. Mohammed, Sergio, Al, Dave, Mark, Svinborn. Good to see you, my man. Alan, Gary, Kevin, George, Terrence, Rob, Jason, Darren, Robert, Randy. Good morning. Tim, General. Good to see you this morning. Mark, Ryan, Harry, Merle. And if I skipped anybody, I'm sorry. I'm just kind of like the chat. I got a little window over here, and the chat kind of pops by as I scroll through. So good morning, everybody. Good morning. And yeah, look at that. $10 trillion we're going to have to refinance. Where does that money come from? This is, and at what point does it get unsustainable? Right? And we have this blue line is the percentage of marketable debt maturing in the next 12 months. Right there. Hanging out 33%. So our outstanding debt, we've got about 33% of that needs to be refinanced. Now, if the rates don't come down, that's refinancing at a high rate, much higher than before. And market interest-bearing public debt maturing within 1 year or less, hanging out at about 30%. So we're seeing a bunch of that CRE that I've been talking about. And all this is like coming together. Like we're going to have a whole bunch of money to absorb this public debt and the Fed debt and the CRE debt. And I mean, where's all this money going to come from to fix all these problems? I don't know. If you got market interest bearing public debt right there is almost, we're getting close to 50% of the market interest bearing public debt maturing within 1 year or less right there. I mean, that's the highest. It really ramped up here. We jumped it up in 2008-9 during the great financial crisis. Now, during COVID, we really ramped this baby up. So, I don't know. We got all the things are brewing for another big financial crisis, and this is that's like this one down here. blamed on .com bubble. This one right here, blamed on housing, mortgage-backed securities, all that stuff, right? It's like financial crisis, and we may pay the piper here. You know, these are technically recessions that they've claimed, these little gray bars. I think we've probably been in one since here, and we're continuing to be in one. I mean, look, we're doing all the things that we normally do when we're in a recession, right? So there you go. And Scam Likely calling me. So anyway, this I don't know. We'll see what happens. See what happens. Anyway, just want to make you aware. We've got all the things brewing to cause a major problem sometime down the road. Now, not today, not tomorrow. All trading involves a substantial risk of loss. All right. Don't stay wrong. Past performance is not necessarily indicative of future results. Just because something happened in the past doesn't mean, you know, it's going to happen again. But the market does rhyme. I finished the book I was reading. I'll tell you more about that later, maybe tomorrow. So this presentation here is intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell anything. All right, it says financial instrument. I'm talking about anything. Don't buy stuff from people. Don't buy stuff from gurus. Don't buy services. Don't buy anything from anybody you don't trust. Don't buy stocks. Don't buy options. Don't buy bonds. Don't buy Forex. Don't buy cryptos. Don't buy futures. Don't long them. Don't short them. Don't trade them. There's all trading involves a substantial risk of loss. That first sentence there. Now, if you trust people, sure, follow them, support them, do the things, but don't buy stuff expecting it to be the goose that laid the golden egg or the get you out of financial jam for free card, all right? Or for however much you pay. Now, if you desire personal financial advice, you better hire and consult a financial advisor that has a fiduciary duty to take care of you. And you better make sure you trust them too, because let's be honest, nobody's watching out for your money like you. And, nobody watches out for number one like number one. And most people out there, they're just trying to, think about it. Most people out there, doesn't matter what they're doing, they're just trying to make some of your money into some of their money. Whether you go to the grocery store or you hire somebody to fix your house, financial advice, whatever it is, they're just trying to figure out how to make some of your money into some of their money. And hopefully I'm here to try to help you make some of your money into more money. But, really I'm just entertaining. And if you choose to take action, you know what you're doing. Good on you. Now, calendar. We're into the first full week of February here. It's kind of a benign week. We got ISM services coming up at 10. We could see a little volatility there. We're seeing not a lot happening on Tuesday for us, for the US. We've got not a lot on Wednesday. We got some Fed members speaking in the around noontime Eastern. Not much happening. Thursday, we got some unemployment claims and more Fed members speaking. Usually when they come out speaking a bunch, right after the FOMC, they're trying to adjust the narrative. That's the thing I've seen over and over and over. After we get done with the FOMC meeting and we start seeing these members come out and speak, they're trying to massage the narrative a little bit around what they decided to do or not do. So Powell really hammering down that he doesn't think they're going to cut rates in March. I didn't think they were going to cut rates in March based on the numbers. So that's that'll be interesting to see what happens. I don't know what he said yesterday. I didn't even look that up to see what he did yesterday on his speech. So coming up next week, we got CPI and PPI coming up in the week, and it should be interesting. We also have core retail sales in Empire State. Next week's got a lot of numbers that tend to set a tone in the market. It's not necessarily market moving, but they kind of set the tone for expectations moving forward. And so just be aware that's coming up next week. This week, just knew that was coming. It's just kind of benign. So that was a sneeze, and excuse me. All right. So where does that leave us for today, though? Right? We've got This $10 trillion sitting out there, it's just cooking. It's going to keep cooking. And I show this chart often. The blue is the 2-year constant maturity rate. That's the real Fed rate. All right. Then we have the Fed funds rate. And it's just FED, FUNDS right there. And if you want to add it to the chart, you just click the compare button, type in Fed funds right there, FED, FUNDS, one word, no spaces, and boom, it adds it. You got to pull up DGS2 first. And this is a weekly chart. Now, here's the thing. If you've never seen this chart before, regular viewers, I'm sure you've heard this ad nauseum. Like I say it all the time. Check it out. Back here, just roll back to the chart I just, I was sharing at the beginning here. Let's pull that back up real quick. We're starting out back here, 0102, 0809. Look at these things. 0102, look what we did. The orange line crossed the blue line, and then we had a big drop. Then, dun 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 dun, 0809, right? 07, 08, 09. Great financial crisis, recession, dun 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 dun. Orange line crossed the blue line, and 08, 09 into the bottom. This was a little rates freak out and led to COVID. And dun 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 dun. Look right there, another one. Gray bar. Orange crossed over the blue and right into the basement. Orange above the blue now. This is another warning sign. Something's brewing. We can't keep it. We can't keep the orange above the blue. All right, now, if you thought the Fed sets the rates, guess what? The market sets the rates. DGS2 sets the rates. The Fed chases the market. When the market starts ramping higher, it's like down here, we're going to hold, we're going to hold, we're going to hold. Finally, the market forced their hand, and they had to raise rates. And then hold, hold, hold. The market started climbing. We had to raise rates. Market climbed more. We had to raise rates, raise rates, raise rates. Chilled out. We went flat for a little bit. Oh, the market started running. Oh crap, we gotta start raising rates again. And then eventually the market tops out, and they keep chasing, and we get a crossover. Sounds a lot like what we had right back here. Fastest rate raises in history. Well, we kept climbing at an epically fast rate. And then we topped out, and they crossed right on through. They probably should have held steady. As soon as they caught the rate, they should have started holding. It's not what we did. We kept on ramping. Now we're firmly above, holding steady sideways. Probably going to hold again in March. If this thing breaks down, if DGS2, here's, you can almost set an alert right here. If DGS2 breaks down below about this 3.75% rate here, you say, oh, but mortgages came down. Look where mortgages started coming down. DGS2. All right. It's very, the market sets the rates. The Fed just chases them, and now the Fed's above the market rate. How long can they hold it before they cause economic chaos? Is this going to be the one time in my whole trading career that they don't cause economic chaos? Shoot, no. I mean, I started trading right here in the late 90s, right back here. Every time we've crossed that orange line above the blue line, since I've been trading, we've had some kind of economic chaos and a giant pullback in the market. Now, I did speculate that we may see rates take off again. And it may be up here before we get the big chaos. So that's one thing to watch. If we break down below about 3.75 in the real market, and it doesn't just pop back up, it starts breaking, we're going to have some kind of problem. All right, everybody clear? Hey, wrong number. Good to see you, as always. So, anyway, there you go. There you go. All right, everybody got this. It's making more sense why JT focuses on this. Say yes, no, let me know in the chat. Anyway, I just keep an eye on it. This is a very slow moving weekly indicator. So it's just something to keep an eye on. It's the barometer of Rutro, as somebody says in the chat there. Anyway, S5FI, look at this. Right here, stocks above the 50-day moving average. We have come down and kind of bounced off of my roadmap line, which doesn't really mean much on this chart because it's an oscillator. We usually hang out at the top, hang out at the bottom, hang out at the top. That's just the way the market works. We tend to, if we break down below 20, we tend to go up and hang above 80. The market likes to go touch extremes, but not stay there. So extremes are when all the stocks are kind of tipped to one side of the boat, and then we go tip it back to the other side of the boat, and then we tip it back to the other side of the boat. So that's for the 50-day. Now the 20 stocks above the 20-day tends to be a little more chaotic. We tend to get more of these spikes and drops and chop in here. We had like a triple bottom before we went up to make a double top here. Now we may be back on the way to make another bottom in the stocks above the 20-day. I don't know. We'll see what actually plays out. But this thing keeps, the big thing to note here, S5FI coming off of the highs, while S&P keeps grinding new highs. So we're having less and less stocks above their 50-day moving average in the S&P 500 while it keeps grinding higher. And you can be like, well, it's all on the Magnificent Seven. Yeah, but that indicates something bigger is brewing here. A bigger down. How long can the Magnificent Seven hold the S&P up at the all-time highs while this thing comes down here before we get a bigger back here? This was October when we got down here. We were hanging here in July, and we started, we were actually right up there into the end of July when we started down. We topped out back here, and we actually broke down back in mid-January, but S&P keeps grinding higher. This is like a recipe for a big uh-oh. I'm just warning you. This is another warning sign, another indicator light flashing on my dashboard. There's problems brewing. Just want to make everybody aware. Should you short everything right now? No. I mean, the market can keep doing ridiculous stuff. The Magnificent Seven can keep chugging higher, doing crazy moves, and we don't have to pull back. But one of these days, we're probably gonna flush it out. All right. Starting out with a little bit of negative today. We did kind of hit this target zone that I thought we were gonna hit, and we haven't done a pullback since we started up in October really. October 27th was the last big red day. I mean, we've kind of had a little bit of flash here and there, but just keep pushing this thing higher. One of these days we're going to see something. And don't say I didn't warn you. I would be cautious. All right, be very nimble on your positioning right now. This is not the time to go heavy in everything. Back here was the time to be heavy. Going in, buying bargains, going heavy. Especially when we broke above right here, that was time to load up. This is time to be booking profit. This is time to be watching out for the signs of this thing cracking. All right. ES just showing a little bit of red, not really doing much. NQ also hanging out right there. We haven't made a higher high. Look where we made the highest high on NQ. This is NASDAQ right here. If you're unaware, we made that highest high back here in January. All these days since, even with the Magnificent Seven, which are all in the NASDAQ, it's not pushing new highs. That's curious, right? Something weird's going on. Something weird. Now, could we pop a new high? Sure. Hardly possible. But something weird. Like, things aren't all the things aren't quite making as much sense as they should here. Right, the pieces and market has this humbling way when things are all getting weird of doing the thing that cleans it all up. Right now, I think a big swing down in the market might clean this all up. Russell is the cleanest one of the in the land, and I think we're headed right down here. We do have a gap down on IWM for opening bell alerts, and I'm not so sure we're gonna go fill that today. Closed up here, gap down on the open. I'm looking for a move down at least to the roadmap line, if not down into this zone. That's IWM, Russell. So if you're unfamiliar, ES is S&P 500. All right, that's the futures. NQ is the NASDAQ futures. That's QQQ. This is SPY, SPX, all that stuff. This is QQQ, all the series of QQQ, TQQ, SQQQ, all those things. This one, IWM and all the IWM things, E-mini Russell. And oil, doing the more bearish thing. We broke that. This is curious to me. We did the same thing we did on gold and Bitcoin, where we broke the uptrend of lows. On Friday, I got kind of more pessimistic. Now, the thing here is we're holding a 618 of this whole big move up from this low in December to this high in January, right at the end of January. We've retraced a 618. We've held it Friday, and we're holding it today. Somebody was like, JT, are you getting short? Not getting short. All right. That can be a support. And even though that was a 3-wave move, we could launch off of this. This could have been a A wave, and this is a B wave, and we could get a bigger C wave correction off this thing. It has invalidated the bullish setup right now for going much higher at this point, but that doesn't mean it's not going to do something choppy and corrective instead. Now, if this is a corrective A and this is a B wave connector, this holds and launches off, I would expect this to stop in this vicinity right here, 83 to 86. If we do this, if we come launching back up, we'll probably stop in this zone right in here and turn down again and probably come down for a bigger move down. That bigger move down. Oh, moving the wrong fib line. That move down, if it got up to there, we'd be looking at 62, possibly 56. So supports 55 oil still. So we may see that pop, and then like that, volatility in oil. Now, if we get below this zone that we're hanging out right now, if we get below this kind of orange band I've put on here, we're probably just going to go ahead and do this, move down to 60. All right. It did go to, well, it went below zero. Oil went below zero for a few days back here in 2020. Created this negative 40 asymptote thing and messes up a lot of the indicators because stocks don't go below zero. So nobody planned on that. And all the indicators go crazy when you line that up. But I'm just talking about this recent price action. 3-wave move is not a trend. That's a corrective type move. Now, is it corrective A or W, X, Y, or ABC? This Elliott wave speak, if you're not familiar. I don't know. We're about to see. That could be all the move, and we extend it and make a lower low. And once we make a lower low, lower than here, on this move, if this move keeps going down, anywhere down here can wrap this up. Anywhere from here down to here. And it could extend lower. But anything lower than that low right there from December can wrap this move up at this point. That's why I've got an alert right there at the low. All right, any questions on oil? Kind of turned more uncertain for a little bit. I did close my long position when we broke that Friday. I was like, nope, we're not doing anything bullish for a little while. Now, if we start breaking higher, I'll probably add back on and capture this move. Going to here, up into that zone somewhere, this orange box. But at this point, that's not high probability. Going down is not high probability. Just doing nothing. Not being clear is what we might do. And we may pop up, retest the downtrend line, this uptrend of the lows, uptrend of the lows, bounce off and come down here. That may be exactly what happens, similar to like what we're seeing on gold. Uptrend the lows, and it goes on down, broke down, came up, hit it, and pushing lower, probably going to come down here. See that exact same pattern kind of hanging out here on Bitcoin. Need to pull this back down to the lows, low, low. We came down, we popped up, and we're doing nothing so far. I think we might flush off right here. Now, one thing to note on Bitcoin, we have the halving event coming up. And right there, 10,942 blocks left, about 73 days. We'll see what happens. But we're likely to get some FOMO kicking in when this gets down to about in that 30 to 40 day area. Maybe down, we're going to see FOMO kicking in. People are going to want to be in this. The hype is going to be real. There's going to be people expecting this thing to moon as we go through halving. Well, guess what? It usually takes about 220 to 240 days after halving, after this date, before we make a new all-time high. So we're likely to go through a period where it's like, oh, sell the news. Oh, it didn't. I thought Bitcoin halving was bullish. It's not immediately bullish. That's the problem. It takes a little while to get going. It's taken a little while every single time in the past. All right, we don't just go to the moon on a halving event. That's why all my positions are out a while. Look, last time, May, farted around from the halving event over here. 144. It farted around for like almost 6 months. And then it took off. All right. Time before that. Coming on back. Oh, we don't have futures back to halvings. I have to switch the guns. Switch the manual. Let's see. All-time history. Jump back in my time machine. See, there was the halving event right there. It's not all bold, but having a big blue line vertical. That was the last time. Time before that. Time machine. Right back here. Look how long this one took. Right around about 200, kind of sideways-ish for about 260 days, a little over 6 months. And then went crazy. Don't expect it just to go blasting off at the halving, all right? It takes a little bit, takes a few minutes. Time before that. That one messed around for 90 days, 3 months. Then started popping. Then went through a pullback. And out here about 260 days before we really starting this move. So don't get hung up. All right. Make sure you got plenty of time. April is not plenty of time. April is the halving event. April's not plenty of time. All right, it's probably going to be out here in December before we really start. I mean, we could be like farting around until December and then launch. So if you're just in early 25, you should probably look at maybe how bumping those out to 26 at this point. All right. Ethereum, Ether doing that same pattern. Uptrend lows, broke down, retest. Proof is in the pudding. Does it reject this breakdown and pop out, or do we get continuation lower down to this zone? That is the question. Neither one's a high probability trade. Like, it's not the highest probability trading pattern. Excuse me. Until we either break down below here, high probability. Break back into above the downtrend line with a couple daily closes, we could go up. Same on Bitcoin, same on gold, all those things. Same pattern and same thing showing up all over the place in the markets. Dollar, look at this. Next upside resistance right up here at 104. If we bust on through that, we may be set for rallying up to a new high. If we get above that zone, we could go right on up there. That's pretty crazy. Very unexpected for me on dollar index, but it'd just be part of the bigger correction, I guess. Don't expect it to go much higher than 109 if it breaks above that 104.80 area. Now, if we reject it 104.80, we're coming on down. More than likely going down to the 95 area. So, what's moving today? What's popping? What's dropping? Well, Estee Lauder popped up to the roadmap line. I thought we would do that. If we can get the bigger move, we may come up here to that resistance. So far, that was the move I expected. I drew it on there, back here, and we did it on earnings. Now, we have to wait and see what the reaction is. What is the reaction? That's the big question. If we drop back below the roadmap line, we may come right back down to the lows. May come right back down here. Now, at this point, we have a move down and a retrace. It was a measured bounce-ish. That would put us at 170, maybe the upside target. If we're going to be bullish, we should run up to 202. But if we just retrace from here, that's not so no bueno, as somebody says all the time. NVIDIA, nice ridiculous pop, continuing to push up into the target. 740, probably my upside limit at this point for ludicrous levels. Maybe as high as 800. This thing's we're going to get some kind of wicked pullback before long. It's gonna happen. It's gonna happen. I want everybody to be careful. Don't go all in on NVIDIA. It's going to get a wicked pullback. Lilly starting to do something exponential. These there's more and more of these doing exponential crazy stuff and doing that straight up pattern. Anytime we've seen that straight up pattern before, it's kind of like you touch the hot stove and you get burned. Then you do it again and you get burned. And like, how many times does it take before you realize that this pattern is the pattern that burns you? Can it keep going? Yeah, it can keep going and be crazy, but eventually, they're all going to correct back out. Usually pretty violently the higher they push higher. And when they go way up there, they usually come way back down. I mean, and this one's another one that people have been hyping up. But you know what happened last time? When everybody was talking, Trump social, Truth Social, Trump mark, it's gonna go, and this thing's gonna be worth like more than Google. Then where'd it go? Back down to 10, 12. Now it's hyping again. I'm just saying, be careful on these things, please. All right. Is there money to be made? Sure. If you stay quick and nimble. Highly likely we find resistance at 48 and then turn down again. Go visit 20. Why do I think that? Look, it's the same pattern, just on a smaller scale that we did right here. See how we popped? We popped that crazy pop, came down, we made a retrace, and then went flushing on down. That's the same thing we're doing right now. We made a little crazy pop, much lower, move down, lower high, and flush it on down. NVIDIA, the more it does that, the more likely it is to get a big deep retrace. The last time NVIDIA did a crazy exponential move, we went into, I mean, look, that's the same kind of move we're doing right now. You see it right there? Ignore the prices, but look. And then we went down. But times are different now. We have AI. Yeah, are they really different? We're hyping. Watch out for the top. Caterpillar. Wow. Since when does Caterpillar go exponential? That hit 335. That was kind of my expectation. The max. I do expect that one to retrace pretty substantially at this point. Could it keep going? Sure. I mean, we could go up to 380, possibly 400. That took a lot of energy for Cat to do that. And I do kind of expect, at least at the minimum, one of these right here. Right back down the 1272. Be around 311. Wow. There's biotech for you. Being crazy. Right up to the prior resistance. Right there. Imagine that. Could that be blasting off? It could, but I don't mess with biotechs. It's dangerous. SMCI, look at that, doing the ridiculous extension. 687, probably the next upside. Maybe 766. Ludicrous level, 1100. That would be the less than 1% of the time. It will just head right up there. Could it do it? Yeah. It's like a less than 1% chance that we make it all the way up there, but look at that. Look at that thing go. You think this thing's adding value that fast? This is a hype. This is a bubble. Bubbles don't end well. ELF. That did exactly what. After burning my options, that one did exactly what I expected it to do 3 months ago, 4 months ago. God darn it. God. That's this one's JT being 100% right, 100% wrong time frame. I was in options that burned out in probably November, maybe December. And there it is. 100% right on a 100% wrong time frame. Remember, I get it wrong too. Like that, I got that one wrong. I got it right on price prediction, wrong on time frame. Time is probably the hardest thing to predict. So, yeah. Anyway, if I say anything that's helpful, beneficial, you like today, make sure you give me a thumbs up. Give me a like. I appreciate it. Give me a like on the video. And MSTR has a potential measured bounce, or not measurement, has a potential roadmap line bounce. Potential roadmap line bounce. It's not a measure bounce. It's a roadmap line bounce. And I aggressively bought a couple shares. I may bail on those if we drop below 400. The conservative entry up here around 625. Looking for 800 or 900 on the upside. And I'd shoot for probably the 800 over the 900. Or protect your profits. Move your stop up in there. Don't let it just drop back out. But we've gotten some crazy extensions on this one. Has extended in the past. Look at it right here, right up to the 2618, and we did that on the prior pullback too. Delete that off. Like this one, right? Where was it? Yeah, this one right here. We did the 2618 on that one also. See that right there, 2618. So if this one does 2618, look how high that is. 1100. Possible. Possible. It keeps doing the pattern. That's almost 1200. So I'm in shares because, hey, riding shares from 500 to 1100. That's a 100% gain just on shares. I mean, who needs options when you can 100% gain your shares? Anyway, and have no theta, no decay. That one was up 100% pre-market. 100% from $5 back up to the pre-announcement, whatever they announced. Don't mess with SPACs. They it's like the IPO backdoor. Anyway, CTLT. Yeah, the button down below for the give me a like on the button down below the video. That's interacting with the video is super helpful. Chatting in the chat, give me a thumbs up, whatever it is you like to do. YouTube keeps track of interactions. So the more you interact, the more it's like, hey, this looks like a video that people liked, and they share it out to more people. So, and the more that happens, the more people watch it, and then the more people I can help, and the more it feeds my family, because, you know, people hanging out watching these things and supporting me is how me and my kids eat. It's just the truth of the matter. That's right up to the resistance there. We've got a substantial resistance here. We didn't break up before. So if we get up into that zone this time, if we can get above it, probably come back up into this consolidation zone up here. So that's CTLT, EVBG, Everbridge. Man, that's the lowest low. And look, it beat on earnings all the way into the low. Could this turn around here? It could. Looks like a complete dumpster fire right now. This could be a measured bounce, though. That has the proportions to be a measured bounce. Measured bounce would take it up to 27 to 29 area. That would be the... Oh, that's where it is. Yeah, it jumped right up in there. I see it now. Didn't see it for one little blip. And resistance there if it's bearish, or if we're going to be bullish, we're going to break out above that zone. We do have earnings coming up later in the month. Could result in a big down again, like we've seen before. Yeah. It's exactly where I would expect it to come up and find resistance and turn down again. If it's going to be bearish, if it's going to be bullish, we'll break up. We'll come up here in this zone. A win on Simi, still bearish. And that EVBG, that has all the makings of a dumpster fire, except we're missing the reverse stock split. But look at that. I mean, they went from 175 to 28. That's all the makings of a dumpster fire. If they drop on down, they'll probably reverse split. And yeah. On Simi is getting a corrective move. It could turn bullish here. That's somewhat of a, that's a measured bounce. And if we're going to do the bullish thing, put us up here around 99. How long will it take? Yeah, that could take out to June, July. Or it could go even faster if it, if it's gonna be crazy. A-net. Resistance. Next fib line up, 295. Next fib line up above that. I don't have them turned on. Let's grab one that has them turned on. Oh gosh, how high is that? What the heck? What the heck? My fib tool doesn't have that turned on. Let's see. Weird. There we go. Yeah, the 351 would be the 282 and then 351. Tyson beat the gap fill. Now it's in the resistance above the gap fill. See how we had this choppy? Oh, there's another gap right there. Go fill that and that choppiness. It's got some work to do. This needs a retrace, a bigger retrace than just these little blips in here. Need a bigger retrace. That was a nice bounce off the roadmap line and extension right there. Right up to the 2.272. Probably going to retrace again. All right. APLS has that gap. Find a resistance. Needs to pop up through it. NVO keeps doing. Top of the channel is going to be up here around 125 at this point. It did that split back here, so it messed with all the numbers. But at this point, right it back up to the top of the channel, where I would expect it to find some resistance. Top of those highs. USD. That's probably going to pop on up to 88. SYM. Kind of chopping in the area here. I have shares on this one, expecting this to pop on up to 72, 73. It's just a matter how long. Learned my lesson on that elf and started playing some shares on some of these that not sure how long this is going to take. So in shares, looking for that one to pop up here. APD. Ouch. Air products. Yeah, strong sell. Is that the air products? Let's see. Yeah. Now I see the logo. That's the one. Wow. That's manufacturing must not be doing too so hot there. That's like welding supplies and things like that. Zscaler. This needs a bigger retrace in here. These little retraces are getting smaller instead of bigger, which makes them proportional. Race. Retracing back out a little bit. I would expect this to be the top at some point here, and we get a bigger, deeper retrace. Pulls that up just a little bit. So, roadmap line at some point, get below the roadmap line, probably come down here. Can it keep climbing higher? Sure, it could, but it's getting to be full right now until we get a bigger retrace. LIN, probably coming back to the roadmap line. Be my expectation. Wow, look at that outlier, and then right back down. Flutter Entertainment. There's the It's interesting. Some days it pulls up a lot of history, and other days it doesn't. IPO'd here, made a bearish move, popping up, retrace, pop up. I don't know. That's not clear at the moment. We may retest the high and then get a bigger retrace. Is what that looks like to me. This looks like a 1, 2, 3, 4, 5. Could stall out anywhere up in here, and I would expect maybe right in there, right at the prior high. That's probably somewhere, maybe even a higher high, and then we'll probably get a retrace. Let's just go to the 1272. Yeah, right back down to that one. Will probably retrace right back like this. And then if we do that, hold there, it can go up a big. That could be a big up. Talking like 790. MCD. Coming back to the roadmap line. That will be if it holds right in here, that will be an epically nice setup right there. Epically nice. That's the kind of stuff that's the kind of trade I would get involved in right here. Beautiful move up, retrace, very clean. Starting a new uptrend. Looks pretty solid. BA. Come on down. Come on down. Tesla. Ooh, looky. Did we make a lower low yet? Did we hit 180? Not yet. 181, 13, 10. 9, 8, 7, 6, 5, 4, 3, 2, 1. We might go hit 180. I may not be as wrong after all. That one actually has support down just a little bit. I moved my share buy down to 178 from 180. CYTK. Looks like we're going to come back to the roadmap line. ALB cannot stop going down. That's the lowest low. Next support down here around 99. Next support zone down here. PDD. Hey. I said we either go sideways until we met the roadmap line or correct to the roadmap line. So we're just going for it. That would be the gap fill. We're getting there. Come in, test that. Then we can turn up again. If we break down below it, coming on down to some of this lower consolidation. FSLR continues to look horrible. Probably going for the 116 area. EMPH continues to look horrible. Probably going for the 63 area. TMF. Probably going to get an extension right down in this 49, 40, 47 and 40, 47 to 50 area right down in here. LABU. Turn it down. Does it hold at the roadmap line, or do we break down and continue lower? That's biotechs with a 3x leverage. I mean, it's like biotech and leverage all piled up, and cool. Now it's not going to work. Let's see. There, leverage works. Yeah, so that one's leveraged. SQM. Expect that one to drop on down. Support at 37, maybe down to 35, 32. Somebody drew a big target up there, on there a while back, and I don't know. Maybe right again. We'll see. Solar Edge. That one's pushing a lower low, 56, possibly 47 on the downside. And somebody said in the chat, BB was BlackBerry, which is going nowhere but down. That's a dumpster fire there. Don't trade that. And tomorrow's my first show at 5 p.m. So make sure you subscribe. Make sure you give me a like on this video. If anything I said was helpful. Bias for the day. I'm cautious. We could get a big drop. We could do a couple. We could start a 100-point drop. Be careful. Be careful. Be careful. We may start this correction. Russell already pushing lower. Target right down here. See what we get to. Thanks for coming, everybody. I'll do this again. Same bat time, same bat channel tomorrow, 9:15. And then, like I said, I have 30 minutes of awesome where I do 30 minutes of your request on Tuesdays at 5 p.m. So make sure you subscribe. Make sure you hit the bell with the notifications so you get alerted when I go live every time. So have a great day.